absolute pleasure to be with you all. I'm a founder of Aurik. I'm an investor in businesses. I have written a couple of books on business growth, and I do some public speaking. I want to make really good use of your time. And the way I hope to do that, because time is money, and we often don't quantify it, we often don't calculate it with much care, with much caution, especially those of us in the professional services or services sector. Time is a cost of sale. I want to talk a little bit about an origin of Aurik and why I'm going to be sharing with you, what I'm sharing with you, and where it comes from. And then secondly, a system to build a $50 million a year business with a story to boot. We're then going to some Q&A, and I do look forward to any questions you might have on the chat. Please feel free to introduce yourself on the chat. I see Fulesha has already taken advantage of doing so. Please, please, and I beg you, and I plead with you, as a human being to another human being, please switch your camera on. I would love to see real people. I would love to see real faces. I would love to see some warmth. I'd love to see some expression. It makes the entire process richer and more meaningful, certainly for me, and it lets me speak directly to you and with you. I think and I hope, and Alistair, perhaps you could even tell us at some point in time, when we will be able to get to physical events as one of the leading event management businesses operating out of the center of London. We are dying to see each other and touch each other and say hello and have some character and personality once again. Krista, very nice to see you. I see you made a big move out of corporate. You've gone into business. That is fantastic. I'm really excited for you. I hope it yields really good outcomes. It certainly will if you apply everything that I'll be sharing with you today. So with that, let's get into it. There's a story behind everything I'm sharing with you. And Andrew, stories create memory. I've been told again and again and again, and they're far more interesting than facts. So there's a real story behind everything I'll be sharing with you over here. And the story is that I was born to 3 entrepreneurial family members, a father and 2 uncles. By nature of who they were, how they came about, they all had to be business owners, and they were. And they did it the old-fashioned way. Musa, they stuck at it. For 45 years, they focused in, they zoned in, and what they did is they stuck to one business, beavering away. They were good to their teams, they were good to their customers, they were good to their staff. They were really good at building a business, a solid business, and they generated very good income. My 2 uncles worked until their mid-80s to late 80s, not because they loved it, but because they had to. And whilst they generated good income for themselves, they realized that they had not built businesses that could be exited for capital profit. My father's story is that he went into his good, solid 70s before there was a fix done on the business in order to exit the business and yield for him and my mother a capital gain, or what we would refer to as business owners, effectively our pension and legacy. After being born into that family, I immediately went into turnarounds. I found 2 fantastic businesses. I thought they were fantastic. Why? Because, Alexis, I bought them for $1 a piece. They were long established. The one business, unbeknownst to me, at the age of 21, 22, had around $420,000 of debt hidden away in it. It was a shock beyond anything else. When you're young and you're foolish and you think you know it all, you simply persist and go forth. Unfortunately, 5 years later, that business was successfully sold. The second business had around $380,000 of debt, bought for $1, but the debt was obvious. I knew it, I understood it. I had the reputation at that point in time and the relationship with funders to get that business very successfully turned around and sold. I then had a very brief stint in corporate finance. I joined an entity where for almost 11 months, I was involved in mergers and acquisitions, lots of transactions, and started to get a real insight into the buying and selling processes behind businesses, only to be called in on a fateful day to a family business to work with my father. He was in his late 70s at the time. I was in my very, very early 30s. And the man who had raised me, the man who had provided for me, the man who had given us a life, who had given us education, given us opportunity, suddenly, no. I looked at this man and I realized that the business that had provided for the family was in dire straits. It looked different, it felt different, it was in a complete shambles. Anyway, after 3.5 years, we managed to turn that business around quite successfully. It was deeply traumatic. The entire process of succession in itself was deeply traumatic. Most of the staff, the management tier in that business, had been in the business longer than I had been alive. It was a very difficult period. We sold the business because psychologically, my father could not cope with the idea that his crazy, wild son, as he saw me, might risk everything that formed the retirement and legacy for himself and his wife, my mother. So we sold that business. I burnt out horribly and went to go, I lived in the US for 18 months, 19 months. And I was actively involved in a lot of deal-making activities, startup activities in the heyday of Palo Alto. The internet has boomed. There was money sloshing around. I worked with some of the smartest people I've ever come across, hardest working and committed people I've ever come across. And I also got access to a tremendous amount of stats. And the stats showed me, after slicing and dicing them, in one of the most vibrant business markets in the world, that 94.6% of businesses started in the US fail to sell, despite the fact that they generate good income for the business owner and the families, despite the fact that they manage to employ multiples of people, they fail to sell and close at a tremendous cost. At the same time, I worked as an outsourced examiner for an MBA program, one of the leading MBA programs, where I marked company valuation papers, around 350, 360 over a 3-year period, and started to get a real insight into the technical aspects that underpin company valuation. Thinking that that was enough to resolve the issue that most businesses started whilst generating good income, find themselves in a position where they cannot be sold. I then set out with a business partner to establish a service that would fix the problem. And it was a disaster. The very first client that knocked on the door, thinking that we were, as a business incubator in our early origin story, an organization that arranged incubators for chicken eggs. You can imagine the plight of that phone call. We needed the turnover, we needed the income. We did the deal and supplied the incubators. And that's when I turned around to my business partner and said, but hang on a minute. We're not here to feed a nation. We're here to solve a very particular problem. 94.6% of businesses started failed to sell. The odds are stacked against us. I knew it wasn't a genetic issue within my own family because these stats suggested otherwise. So we set out to solve the problem. And the way we did it is we started over a 9-year period. We started 12 businesses with a view to build, sell, and grow them. 2 failed, 2 listed on the stock exchange. 3 were acquired and exited through management buyouts, succession stories of success. And 5 were sold to corporate entities looking to acquire strategy, strategic opportunities, innovation, and revenues. And what was most interesting is that the last handful took half the time and just over a third of the investment to build to the same value as the first handful. And through that, we started to identify a system of growth that allows for the process of growth to occur in a more simple, structured, and reliable manner. We called it the Asset of Value Business Growth System. We went to market with it. And now, 7, 8 years on, we work across 3 countries, the United States, the United Kingdom, South Africa, and certain locations in Europe. We've worked with over 2,743 business owners, all doing in the values of $1 to $50 million a year of revenues. And the average annual compound growth rate across that portfolio to date has sat at 28.9%. To give you a sense, it doubles the size of revenue every 31, 32 months. The growth in profits from baseline profits have increased on average to 32.4%. And we've had a very, very happy client rating. My job with you today is to share with you what that looks like and how you can apply it into your own business. Before I do so, Guy, we haven't met each other yet. I'm sure we will. I had a look at your business on the net. I was fascinated by it. And I hope you're enjoying a good cup of tea and not coffee. It should be coffee, actually, for what I'm about to share with you. Building a business is no different to sailing a ship. If you think about it, all ships have a destination. Every business ought to have a destination. If you don't have a clearly defined destination, like sailing a ship that leaves port and harbor, how do you plan and map your journey to reach that destination? How do you at the same time know what resources, fuel, food, and water you need to ensure that you get there on time and not find yourself, as 94.6% of businesses do, out at sea? The next thing is, all ships have crews to capacitate their safe sailing. And crews are governed by systems. You have crews working above decks using systems, crews below decks, and crews midships. Everybody knows what they need to do, when they need to do, and how they need to do it. And importantly, everybody understands how their crewmates, in doing what they do, benefit them and help them get their job done to ensure safe sailing. You then have an option to be working in the engine room, which is typically below decks. The engines churn away, drive the screws or propellers, and give you forward momentum. Or you have an option to be up on the bridge, where you have a 360-degree all around you, with good lighting, fantastic instruments, loud hailers to bark instructions at everybody. And if you're lucky, an espresso machine to make the sailing journey a lot more comfortable. All ships are in service. All businesses today are services businesses. There's a lot in common, and I'm going to pull the analogy through as I talk to how you can get your business built to $50 million or more in half the time that it ought to take or normally does take. The way that we do it is we have created a growth system. A system, if properly implemented, gives you control, gives you measurement, and gives you outcomes. A system, if properly implemented, allows you to migrate into a position of leading growth as opposed to doing growth. And there are three elements to it. The first thing is always to define very clearly why you're doing what you're doing. What is your intention behind your business? And in a world of change, having a single strategy is essential to build momentum. The next thing is, how are you going to achieve it? What system of growth do you apply in order to get from where you are to that intended destination? A ship system is simple. You've got navigation equipment, you've got rudders, you've got a crew, you've got engines, you've got equipment and technology, and all of it is aligned and integrated to get you from the port of sailing to the destination of arrival, for so long as you don't get stuck halfway through the Suez Canal. And finally, there is a system of leading growth in a business. Simply working hard, beavering away, having everyone do what they need to do. Tony, you'll no doubt agree with me over here. Lawrence, even more so. What you do in the early stages of your business and how you lead growth needs to change as you move from one level to the next. And the reasons are obvious. As you grow a business, so too do you increase complexity, and do you increase your exposure to more competent and capable competitors. If you are growing your business at a $15, $20 million a year level, in the same way that you did, reaching $5 million a year, problems will emerge. I'll be sharing detail on all these three elements. So why? Why are you doing what you're doing? And how do we overcome the 7 impediments to growth? They're arranged from what we have seen over the years in 3 areas: leadership, operations, and the future. From a leadership point of view, without question of doubt, the 2 most telling aggravations and points of concern that we constantly hear are: how do I create more time to lead and less time to do? How do I build a business that can operate largely, operationally independently of me, so I can focus on next level growth? The second is, how do I respond to a changing, noisy environment? The level of competition is massive, and there's an increased sense of commoditization, a race to the bottom. Operationally, there are 3 areas. How do I find, win, and hold customers? There are over 500 million websites out there. There's over $1 trillion a year of digital advertising out there. How do you find, win, and hold new customers? And when you do so, how do you grow operationally without chaos? The second biggest issue after finding and winning and holding customers is, how do I find the right team made up of the right people to do the right thing at the right time? It's fascinating to me that increasingly we are becoming more and more educated globally, and yet at the same time, it's harder and harder to find the right skills and to orchestrate and coordinate them effectively. And then 2 problems that mostly reside in the future, that most of us get exposure to only in the last mile. Growth. Growth needs to go well beyond revenues, because if growth doesn't yield a widening yawn between revenue increases and EBITDA increases, profit increases, any wily buyer knows they're effectively buying a world of trouble. And then finally, how do you manage your valuation? We spend 10, 20, 30, 40 years building our businesses, and on average, we invest between 30 to 80 hours selling them. We build our businesses largely to generate income. Do we understand how to build it to generate value? If you don't know where you're going, you'll end up someplace else. Pip, I'd love to run a poll. I'd love to hear from you. Why do you do what you do? Where are you going with your business? Where do you see yourself moving with your business? Are you looking to build, grow, and dominate in your sector? Are you looking to IPO? That would be a sweet exit. Are you looking to build, grow, generate income, and then eventually close? Join the 94.6 of businesses out there. A large number of people who do. Are you looking to build, grow, and hand over? Succession is a very, very viable exit strategy if it's done right. The big problem, of course, is it needs to be funded. As it stands right now, it's a build, grow, sell majority on screen. I think it's a very good strategy for one simple reason. Through no fault of yours or mine or anyone else's, there are only 2 destinations for every single business out there. It's either a sale, Shandor, or it's a closure. And the stats themselves have spoken. If you think about what we ought to be doing, we ought to be building an asset. And what is an asset? If we take a simple example, let's say we acquire a share on the stock exchange. We acquire it for $20. The intention behind acquiring it is to enjoy income growth. We hope that in holding it for 5 years, we will generate dividends to provide us with income. We want to generate capital growth. We hope that when we sell it in 5 years' time, we can sell it for $100 or so and enjoy an $80 capital gain. And all of this requires that particular asset to be tradable. From an Aurik perspective, we see it identically. We call it an asset of value, the single destination that every business should be sailing to. And this is a business that is positioned from a brand perspective successfully and uniquely in the marketplace. It is driven and governed by systems that have team members empowered to operate the systems, which release your time, Ian, to focus on next level growth beyond organic growth. And through that, have the levers of value, of which there are 5. If we're aligned on that basis, the next question is, how do you get there? And you get there largely by implementing a simple, structured, repeatable set of systems. A system in itself is made up of activities, the sum of which create an exponential whole. And if you can identify a system of growing a business, as you move through 4 stages of next level growth, if that system itself is predictable and reliable and repeatable, it's what will release your time to spend 70 to 80% focused exclusively on growth, as opposed to being folded into operations. There are 2 components to it. In the first instance, every business needs to position itself uniquely and distinctly in the marketplace. In the next instance, you need to govern the delivery of that positioning through all your operational activities, from marketing to sales, to operations, to fulfillment, to administration, to money management, to people. And then you need to get the right team on board, a purposeful team made up of the right people doing the right thing at the right time. This is the work that generates organic growth consistently. It also generates free time. And that's where your job should largely be focused, because in that free time, it's where you pursue growth that moves beyond organic rates. It's about scale and acceleration in revenues, and it's about reinvigoration or innovation as you migrate from one tier of growth to the next tier of growth to the next. Remaining relevant in a changing world is our job as business owners. If I look at positioning, what makes your business special in the eyes of your customer? Pippa, let me understand from everyone on board. Is it the features of your product? Is it your price? Is it your service? Service really matters, Krista. You are in a price-cutting sector, and service matters. Service brings on word of mouth. Is it quality? Yvonne, Tom, no doubt. The quality of scientific data and analysis and research is essential. Or is it something else? So most of us are arguing service. A few of us are arguing the features of our products and our service. The fact of the matter, from what we have seen, is that price no longer is a competitive advantage. A price advantage today can be superseded by somebody tomorrow. The features of your product or service are easily imitated and copied. And service, when you truly look deep down at it, is it centered on 1 or 2 individuals in your organization, or is it centered on you? Consistently, what we have found is that a business that decides to clearly define who it serves, understands what problem through its product or service it solves for that group of customers, and then most importantly, creates a remarkable experience for that customer to get that problem solved. Those are the businesses that are on the edge of competition. And what it requires is an enormous amount of discipline to say no more often to clients that don't fit your definition of positioning, and to those that do, delve deep, hard, and understand exactly what experience they want in order to have a problem solved through what you do in your core business. It is the edge of competition. From there, we move on to the system of delivery. If we understand that the purpose behind why we exist is to clearly define who our customers are, and thereafter understand them in terms of the problem we can solve for them, and thereafter define the exacting experience needed in how we market to them, how we sell to them, how we fulfill and service their requirements, how we administer our relationship with them. Those commercial systems, the functions of every business, if well designed, deliver that experience on a consistent basis. I'm interested to hear from you. In your business, which is the toughest system to get right? Which one occupies most of your time? Is it about lead generation? Sure, that's become hard, guys. It's become really hard, folks. It's a tough thing to get right nowadays. Once you get leads on board, once you have interested parties on board, what are your conversion rates looking like? When you fulfill them and service them, is there chaos? Can every client that you serve say they've had a similar experience? Has it been fairly consistent? And has it been an experience that refers your business to others through their word of mouth? Or has it been with regard to procurement and buying? Well, what we're looking at is most of us by far have got very similar requirements. There's an equal spread, a third, generating leads, servicing the leads, fulfilling our promises. Because here's the thing, that system of delivery where we take all the commercial functions, marketing to generate leads, sales to convert them, operations to fulfill them, team, finance, if we can build them as one would build a cog to optimize in its own right, and then work together to drive the screw, drive the propeller, this propeller will yield your positioning for you. I understand why I exist. I understand who I serve. I understand what problem I solve for them. And I understand what experience they wish to have. And I have built my operational systems to articulate that exact understanding. Systems are activities placed in a sequence that can be measured. They're supported with a job description. And that immediately puts you in a position where perhaps for some of us, the first time, we can find the right people to do the right thing. Because in an asset of value, you seek to find people to operate your systems for you. If you can find the right people to operate those systems, and those systems are well designed, you get a coordinated, orchestrated crew that results in driving the propeller to get you from your port of departure to the destination. Within your business, who is the rock star employee that you would love to have on board? Against which category of commercial function do they work? Is it someone in marketing? If it is, speak to Mr. Alistair Graham. Is it someone in sales? If it is, speak to Steve in Chicago. Or is it someone in operations? If it is, speak to Nick Snell. Who is the one individual that you need in your business to remove your biggest headache? And normally those headaches all sit across operations. In getting this process right, we first start by positioning our business uniquely. We build systems to deliver on that positioning. And then we find the right people to do the right thing at the right time. When you recruit a team on board and you recruit them against a system in order to operate the system, the process of recruitment is dramatically eased. At the same time, when someone is well suited to operate a system, confidence grows. And when confidence grows, people themselves innovate the underlying systems on behalf of the function that they perform. The systems themselves need to be optimized, but at the same time, coordination between the people who empower and run the systems is vital. Let's pause for a minute, because what does this yield for you? A well-positioned business, enabled through systems, empowered by people, will generate two outcomes: consistent organic growth, and most valuably, time. Time for you. Because the big question, of course, is where are you in your business? Do you spend your time in the engine room hauling coal, keeping that engine burning, keeping those engines turning, ensuring that the propeller is in constant velocity to propel the ship forward? Or do you spend your time up on the bridge, where through instrumentation, through navigation, you're guiding your business from one stage of growth to the next? It is impossible to grow beyond organic growth rates unless that growth is led by you. It's impossible to lead that growth if the majority of your time is being spent in the engine room. Escaping the engine room is the first tier of leading growth in your business, that without which achieving it removes the opportunity for you to go through 3 additional tiers of growth. It is the defining difference between your business simply being a job, a really good income generator, as opposed to being an asset. An independent set of systems operated by people that create income growth, yield capital value, and can largely operate independently of you. In getting this right, what lies thereafter? Accelerated growth needs to be led, and accelerated growth needs time. If your function at work is largely consumed in day-to-day operational activities, growing beyond organic growth rates is almost impossible, because where do you lead and direct the team? Accelerated growth needs to ensure that your positioning you have worked hard to achieve in the market is not disturbed. In other words, through your products and services, you solve a very particular problem that's well defined, and you understand the experience that those with the problem need in order to support your business going into the future. Through the system of delivery that you've built, in looking for accelerated growth, disturbing that system of delivery will certainly see if the growth comes on board, turnovers rise or revenues rise, but at the same time, it will see your operating overheads rise. And if increased growth does not result in increased EBITDA numbers, you're compromising your valuation and you're compromising your exit. Time is needed because next level growth needs to be led, and it needs to be led by the owner of the business. 70% of your attention and focus should be on that. Impossible to achieve if you have not built these first 3 elements to give you the organic growth that allows you to focus and relax in looking for next level growth. Once that yawn has been achieved, and as it's achieved, the next tier of how you spend your time is on innovation. And innovation simply means reinvigoration. The relevance that you found in your positioning 5 years back, 10 years back, that allow you to dominate a sector today is very different for that same sector 10 years on. Things change, technology changes, legislation changes, market conditions change. And if innovation is not led by your customers, and rather it's led by bright ideas that you might possess in your own mind, we've all been there. It's incredibly hard for those bright ideas to yield any true value. If a business is built to serve a particular group of customers by solving a problem through a great experience, surely our time in focusing on growth and innovation should be spent with our customers, asking them, how has your problem changed? How has the quantum of that problem changed? How has your experience that you require of us changed? Because through that, you lead the adjustments in the system, you upskill your team in order to maintain the organic growth rates and move to next level. A simple system that once it's in place, you need to understand when you need to change what you do and how you do it as a leader in your business. And through that, I want to end off by sharing a story. It's a story of a business, a baker, that I met a number of years ago, 14 years ago, in fact, who came on board. He had started the business at the age of 29. Prior to that, he had worked in the corporate commercial baking environment. He was 54 years of age at the time. He knocked on the door because he said he was unable to sell his business. Why do you want to sell your business? I asked him. He said, my passion has turned into a slog. He was a fourth generation baker. His great-great-grandfather was found in the baking industry in France, where he had gone and procured exceptional recipes on croissant making. His business was doing around $5 million a year, and his profit margins were sitting at around 18.3%. I said, why can't you sell the business? And he said, because I cannot get the money I believe I need or earn or deserve after 25 years of slogging away. And I said, why do you want to sell your business if it's your passion? And he said, because every single day feels like a slog. The love is gone. I need to get practical. I'm looking for a second career. We agreed to work with each other. And over a period of time, we went through a number of iterations in the business. We eventually got his positioning perfectly positioned within the hotel group sector. Instead of trying to serve everyone right across the baking sector, he honed in and zoned in on hotels. Continental breakfasts are significant draws of fresh baked goods. He had the recipes, they had the need, they had a very clearly defined problem, and he began to visit them with more frequency. He had learned that he was selling exclusively to the food and beverage managers alone, who would scrunch away on the croissants that he would bring in every sales call, complimenting him on the crispy outside and chewy inside, until he learned that they were responsible for 25% of the decision making. He learned that finance played a significant role too. He met the finance teams who wanted everything for nothing now. He learned thereafter that procurement had a significant say in who the hotel would onboard as a supplier of fresh baked goods. And they were purely interested in fair trade agreements, transparency in the supply chain, health and safety requirements. And lastly, he learned that the human resources leaders in the hotel groups would not onboard any suppliers if it meant additional training for their teams. And when he realized that he was in the business, in fact, not of croissant making, but of providing the right experience to solve a complex set of problems for multinational hotel groups to onboard fresh baked goods for their continental breakfasts 365 days a year. He embarked on a program of creating the system sets that would articulate that outcome. And with that, his team was upskilled to operate the underlying systems. 14, 15 years on, the journey still continues. He closed his revenues in December last year, COVID year, tough year for the hospitality sector, at $48.6 million. His yawn of profit had increased to 24.8 from 18.3%. And folks, to give you an insight as to what that means, 14 years ago, this business would have fetched in the market through an outright sale around $1.7 million. And today, the running values of this business are around $85 million. From the age of 54 to now, 68, 70. Remarkable achievement in a short period of time. And what did he do? The first leadership tier that he went through was to get his business to $5 million a year. He started the business undercapitalized, beavered away for 300 months in order to yield the $5 million revenues. And this was about trying to understand why he exists, how to position his business in an environment where there are over 6,000 competing bakeries. He then moved to the next tier of leadership with us, and that was about dominating the sector. If hotel groups were what we were going to become expert at serving, by understanding what problems they have and understanding what experience they require to solve those problems, then we needed to dominate into that environment. And over a period of 7 years, he got his turnovers up to $15 million. Thereafter, the next stage was about now truly accelerating growth. It was looking for additional growth outside the hotel sector. And a lot of the attention over here was focused on finding a new sector that had a very similar problem and required a very similar experience, so as not to upset and disturb the underlying system of delivery and not to confuse and complicate the performance of his team. He found it in the supermarket category. Supermarkets need morning trade 365 days a year. The majority of them manufacture their fresh baked goods. They were looking to have that outsourced because in a supermarket itself, occupying space that could be turned into retail shelving seemed completely inefficient. Similar problem, similar experience. In moving into the supermarket category, the same system of delivery, the same team yielded massively accelerated revenue growth rates, which now see him embarking on his final journey. It's about consolidating his costs to create that wide yawn. 300 months alone. And folks, something I'm very, very proud of. 24 months apiece with Aurik. A single system that we introduced into the business, repeatable across 3 levels of additional next level growth, with him spending 80% of his time leading the business differently from stage to stage to stage. So let's go back to the future, because surely the truth is in the eating. We spend 10, 20, 30, 40 years building our businesses, and between 30 to 80 hours exiting them. Through no fault of yours or mine, extensive data sets show us 5.4% succeed in a clean exit. In succession, it's equally dastardly. 27% succeed from founding generation to the succeeding generation. And the reason this is a concern is because, especially in services businesses, when you are exiting through succession, you are typically paid out over time. When you exit, management who have acquired the business need 3 years to settle the score with you. And failure rates mean that that score does not get settled. So I knock on your door as a buyer. And Manuel, I'm looking to buy your business for $1. That's my starting price. And you're looking to sell it for a whole lot more. The first question I ask when I value a business is what makes you special? If you turn around and say to me, oh, this feature in our product does, or our service does, or our price does, all three of those elements which we largely use to position and differentiate our businesses are copyable, imitatable, replicable by competitors who have got funding and time behind them. It is not a point of distinction. The next question I ask is, how does the business operate? And unless I can see a well-organized, orchestrated set of functional systems to market the business, to convert leads through your sales activities, to service clients through your operations, to administer and manage money and coordinate the team, I'm left wondering what I'm actually buying. And then I ask who operates the business. And unless I can see a team made up of people mobilized and motivated, doing the right thing at the right time, I realize that acquiring your business, I'm simply acquiring your job. I then finally ask, where is the growth beyond what you have achieved? If you're not growing pre-exit, it would suggest that the future itself does not hold growth. In the case of the baker, his third segment moving into is the franchise sector. He's hardly touched on it, but he can demonstrate to a seller, or a buyer rather, they have a similar problem and require a similar experience. The final question that gets asked is, Alistair, without you there, will the future present the journey of your past? And if you cannot clearly convince, show, and demonstrate that without you or your leadership team there, the business can continue into the future, it's punishing on valuations. Positive questions in all these areas takes what typically is a 2 multiple of your EBITDA up to a 7 multiple EBITDA. It varies ever so slightly from one sector to the next, but the metrics scale in a very similar way. Of course, you have discounted free cash flows. You have a number of valuation methodologies and techniques. All of them are underpinned by variables. And the question sets that govern those variables are all found in these 5 levers. To the extent that you cannot show that you're distinguished within your sector, within your industry, that you don't have a system of delivery, that your team is chaotic, that you've not grown pre-exit, and that you are the center, Lawrence, of your business, that without you there will be trouble. You come across me in my early years, where I put $1 on the table, and in order to release yourself from your debt, you agree. These are the 5 levers of value that drive every company exit and valuation. Adopting an asset of value business system caters to these 5 levers. Yes, we have to generate income, but we must create an exitable, sellable entity. I want to end off with a couple of asks. My first ask of you is, have you got a clearly defined destination? And do you have a plan to get there with certainty? And the reason this matters, the most valuable commodity we all have available to us, Henry, is time. You can never get it back. Lifting your head of a day to say, I'm now ready to sell, as my uncles and father did, to only realize that they had nothing to sell, puts you in a position where it's simply too late to make the corrective actions you need to create something to sell. Think about how much time you have and how you'd like to use it. There's a big difference between spending time and investing time. Spending time is structural work that you do. It's leadership work that you do. It's bridge work. Spending time is operational. Investing time is bridge work. I beg your pardon. You know the most about your business, your sector, your industry. You lead, you make the calls, you make the decisions. Time needs to be invested rather than spent. My ask of you is, how can we work from an Aurik point of view more effectively and more efficiently with you to help you get to that destination far quicker? And when I argue that we work in order to assist and support growth, I do so with real meaning and intent, because our fee structures are linked to the performance of your turnover. It makes us not service providers, but true partners of growth. And with that, I want to end off. There are a few thoughts for you over here. If you have an opportunity, I would encourage you, of course, as the author of these books, to acquire them, take a read. Krista, I can see you smiling. I know that you read Sweat Scale Sell. I saw your comments on LinkedIn a year ago or so thank you very much for that. They are stories of people just like us. They are hardworking, they're intelligent, they're smart, they're committed. They're stories of how people change the way they do things to emerge with very, very exciting, interesting businesses.